Welcome to this stock analysis blitz for Rio Tinto. Please remember I'm doing this just for fun. Speak to a financial advisor. Rio Tinto are the UK's second largest commodities miner, comprising 20% of the precious metals and mining sector. Their revenues and EBITDA are completely dominated by iron ore. And last week I did a video on the iron ore sector, and in that we found that the iron ore price really was at a bit of a inflection point at the moment. If it continues this long-term trend, that would be very positive for Rio Tinto. So we are in danger of crashing downwards from here. And I was a bit worried that iron ore production was at a maxima relative to steel production, which doesn't kind of bode well for where we are currently with the iron ore price. Most of their iron ore is in Australia, but they're sustaining it with a 6 billion project in Guinea. 15% of their EBITDA is in aluminium and 14% in copper. The aluminium is in squeaky clean Australia and Canada, whereas their copper is mostly in Chile. So before going in, I'd want to have a double check of the political situation in Chile, because I know there has been some problems there with some copper projects. One interesting aspect of Rio Tinto is that they have been investing heavily into copper, even as long ago as 4 or 5 years ago. They really did set the wheels in motion for this, and they're investing 7 billion into this Mongolian project, which will boost their copper production to by something like 50% from 2028. So whereas Rio Tinto have substantially less copper at the moment than BHP, who I looked at 3 days ago, that does mean you get them for a cheaper price, and you could go into Rio now, waiting for this boost we're going to get when the Mongolian project comes online. 4% of their EBITDA is minerals, but this is really a hodgepodge of different things: iron ore pellets, titanium, borates, and diamonds, believe it or not. It's mostly in OECD countries, but to be honest, I regard this as just a bit of a distraction. Their CEO is currently part of a succession plan, and they just bought Arcadium Lithium for 6.7 billion. Now, looking at the lithium price, it's something that was obviously really in fashion when we had all the craziness of the recent years when everyone was going to own a Tesla. The lithium market is looking kind of fairly deflated at the moment. So that does mean they probably would have got a good price for Arcadium Lithium. But myself, I'm very dubious about this. They're currently paying an attractive dividend of about 7%. And when we look at their net income history, it looks very healthy. To be honest, at first glance, Rio Tinto looked like a bargain, because they're achieving a net income of about 11, 12 billion a year, and yet their market cap's only 91 billion. So at first glance, they are looking very attractive. We see that their revenues are looking good and healthy versus the baseline number in 2019. However, their expenditure is up a bit as well. But overall, there is a nice pattern here comparing their revenues against their expenditure. We see a widening between the two. So they are looking, this does look like a very healthy setup here, just based on their net income. Just one thing I noted in their expenditure is how high their finance costs are, and this is mostly interests paid on their debt. When we go down to their liabilities, we see that they have about 12 billion of debt. That's obviously a lot less than BHP had when I looked at them a few days ago. So for a commodities company, they are kind of on the lower end of debt, and it's kind of normal for these companies to have debt, but all the same, they do have 12 billion of debt. And as we can see from their annual report, it's fairly high, quite hefty rates they're paying on this debt, particularly in today's debt environment. So that is creating a bit of a drag on them every year in terms of their finance costs. So I've collated their profit and loss statement into a nice waterfall chart. As with all miners, the depreciation and amortization is a significant chunk of their losses every year, even though that isn't actually a cash flow thing. And they come with a lot of cost of goods in terms of raw materials and employment costs. Actually, I would have thought these costs would be abating though, and particularly raw material costs, I think, have been abating recently. And overall, they have a net income, like I said, of about 12 billion. And I applied a discount to that to account for inflation and things and cost lost opportunity, which gave me a number over the next 10 years of about 75 billion, which stacks up quite nice against their current market cap. And so in terms of their current net income, I think they really do look attractive versus their current market cap. However, when I then looked at their cash flow situation, it's quite notable that a lot of their disposable income every year is going into capex, as you expect for a mining company. How much of that is really necessary capex, and how much of that is converting their mines to have a lower carbon footprint and all that kind of thing? But anyway, they are spending 10 billion of capex every year, and it's leaving them with a free cash flow. I calculated it at 6 billion. When I checked the annual report, it's actually only for about 5.6 billion. Okay, I can see that that's because I didn't deduct the interest they were paying on debt. So let's call it 5.6 billion free cash flow. After the dividends, they're actually treading water. And in fact, as we can see in 2024, they had to issue shares in order to cover their dividends. So this then has transformed Rio Tinto from when I was going just on their profit and loss, they kind of looked like a cheap, good deal. All of a sudden, looking at the cash flow situation exposes them as currently drudging water. And this makes them slightly worse than BHP Group, who I looked at a few days ago, where they were basically running on fumes to pay the dividend. So again, like with BHP Group, Rio Tinto, it's all about the iron ore price. I really would like to wait to see how the iron ore price plays out before I'd invest in them. When I look at this technical pattern with the Rio Tinto share price, which has a canny resemblance to the actual iron ore technical pattern I've drawn here, I am kind of alarmed as we've broken down from this. Is this the market's one step ahead of what's about to happen with the iron ore price? So for Rio Tinto, it's definitely a case for me of perhaps having them on my watch list, but waiting out this rather nasty looking inflection point we could be in now. So that completes my video. I hope you found it useful, and speak to you at the next one. I do videos like this one just for fun as a hobby. It's for entertainment purposes only. Always consult a qualified financial advisor before making any investment decision.